India and US have been negotiating a bilateral trade agreement since early 2025, and already 5 rounds of talks have happened between both the countries, with an aim to increase the total trade to $500 billion, which will be double of what the current trade volume between the two countries is. However, the tensions rose recently when US unilaterally slapped a 50% tariff, citing India's import of Russian oil, and as a result of which the trade talks slowed down. But the talks are still continuing, and the parties are hoping that they should be able to reach an agreement by November. Now, let's look at the pros and cons and what India is doing to counter this particular tariffs. Number one, India is not an export dependent country. It's a domestic consumption driven economy, and India's exports only contribute 2% to its GDP. So the impact is going to be minimal. However, the impact is already felt on sectors like textiles, pharmaceuticals, as well as engineering goods. And we have seen some correction in stock prices of companies which are listed in each of this particular space. However, what government is doing right now is they are offering more support to these exporters so that they are able to weather the impact of this tariff increases. So that's number one thing that they're doing. The country is also negotiating multiple other bilateral trade agreements so that they are able to diversify away from the US. And then, most recently, the UK trade agreement also got signed between UK and India. And India is negotiating several other such bilateral trade agreements. Finally, India is also bringing in reforms in the GST area in order to boost the domestic consumption. So net-net, if you were to look at it, the impact of trade tariff is going to be relatively low. Government is extremely proactive by bringing in reforms as well as by also signing other bilateral trade agreement. And last but not the least, we are still hopeful that the trade agreement with US will still got signed, sometime by November. So thanks for watching. This is our view from CrispIdea.